To a person, they like the financial sector. That's what I heard. Does this look to you like it's ready to go at this point? I don't think so. What they're saying is if interest rates stay up, the financial markets make money. In other words, the spread between what you take money in for, what you can lend it out at, that is what they're basically saying. Well, we'll see. But the chart action is bearish. Here's another problem in the market. 18-day average is chasing down the 100-day average. So the industrial sector still falling, still no change. Did you see Chicago's manufacturing numbers today? I think it's the lowest reading I can recall in recent times. It was a 36. The market was looking for a small increase. Anything under 50 is shrinking. Last time we saw the number, it was in the 40 level. They were looking for 42, and it goes down to 36. When we look at the energy sector, just sideways action right here, butting up against the Bollinger Band at 1897. Any reading over 21 will tell me that this market probably wants to give you a rally back towards the 18-day average. But until that occurs, the pros are probably selling short. Now, I don't know how aggressive the pros are going to be in markets like this. I can tell you, I tell my clients right here, this is not where you start putting on new positions. You do it right after the first of the year. Ideally, we've seen the first break in the market. How deep can we get some of these breaks, and how do we catch the turnarounds, such as if you lose this downside momentum? Those are some of the things I'll be looking for. In the gold market, the trend is still basically mixed to down. The bias is clearly to the downside. The market's stuck at the green line, the 100-day average, but it's very oversold. Silver market's still falling down here, and it's being led by the copper market, which are new lows. And as I've told you over and over, coming from a commodity background, you look to see what copper's doing for China. It is the canary in the mine for manufacturing and for industry, and it's not doing a very good job. And it's not only China, it's other parts of the economy. I'll go back to the Chicago manufacturing number. BND, still bearish. So yes, we're getting a short covering bounce, but there's no sign here that the market has turned the corner. We're still in the 458 level in the 10-year note. In the dollar, the market's back and forth here, just going sideways now and very oversold. Will it be able to fill any of that gap becomes the big question. FXE, breaking down again. Today when I did my morning futures, I was telling traders that if I were to do anything today, which I had no intent of doing, and I cleared that up, I said, the currencies looked like short sales, and by the end of the day, that's still how they looked. So I want to remind you that we have our sale going on if you're interested in learning my charting techniques. And it covers the swing lines, window envelopes, Bollinger Bands, momentum index, very important. You put it all together, and then with the core course, you can choose from a free Bollinger Band course or my outside day course. Both of those would run you $120 if you bought them on their own. I've cut the price of the course for this week. The sale's going to end this week. From $599 to $299 for the core course. Then you can choose one of those. Included is the charting software, access to my morning videos, my research for a short while. So you get to see all this. When you add it all together, it really adds up the value of this. So just the charting software is $100. Charting software has gotten very expensive. I look at what they give for free at the stock firms because I have my own account, and it's not very good. You gotta pay up to get the good stuff. So if you're interested, the enhanced Bollinger Band course, the outside day course, all comes free with this. Go to iraepstein.com. You'll see on the top left side it says New Year Charting Sale. It's right there is the name. There'll be an icon that I put up here as well. You can take that and work with it from there. I'm Ira. I will catch up with you first thing in the morning. So sorry that I had my trading hours screwed up for tomorrow. I made a mistake. You take care.